Bitcoin has just slipped below $88,000, but the real story is what's happening this Friday. A massive $28.5 billion options expiry is about to hit the market. Is this a crash or a setup for a major move? Let's break it down. Welcome back to BlockWire News. We bring you the most critical crypto updates daily. If you're new here, make sure to subscribe and hit the bell icon. Crypto prices moved steadily lower during the U.S. trading session on Monday. Bitcoin slid below the $88,000 mark after briefly climbing above $90,000 earlier in the day. Ethereum also struggled, ducking back below $3,000. The market is losing ground ahead of a historic event. This Friday, over $28.5 billion in Bitcoin and Ether options are set to expire on the Deribit exchange. This is the largest expiry in its history. While the broader crypto market is red, some stocks are bucking the trend. HUD-8 shares rose 16% on Monday, following a 15-year AI data center lease deal with Fluidstack. Coinbase and Robinhood also saw some green, although they pulled back from their highs as crypto prices fell. According to Deribit executives, this expiry marks a shift from speculative cycles to institutional maturity. Right now, the max paying price for Bitcoin, where option writers make the most money, is $96,000. However, there is a risk. A cluster of $1.2 billion in put sits at $85,000. If selling pressure builds, this could pull spot prices lower. Traders are playing it safe. Data shows a shift from December positions into January 2026 put spreads. They are rolling their defensive bets forward rather than closing them out. With liquidity thinning out and traders covering risk into the new year, caution is the word of the week. Do you think Bitcoin will bounce to the max paying price of $96,000? Let us know in the comments. Thanks for watching BlockWire News. Don't forget to like and subscribe. See you in the next video.